Hi friends, we're going to look at Chainlink and Tezos in this video. FOMO-free, greed-free technical analysis that's delivered in a way that's transformative. I swear, if you watch several of these videos, then you will get into the mode of thinking whereby you'll actually be able to see yourself in the future as a self-reliant, independent, consistent, profitable, an excellent trader. This is transformative knowledge. This is the place to be for technical analysis. Let's dive on into the charts and take a look at two of these altcoins. So thanks for joining me. Yesterday's video we looked at Tezos first. Today's video we'll look at Chainlink first. I actually forgot to add chapters. I'm sorry, I forgot yesterday. I'll try and do that again for today's one. I'll try and remember. Right, looking at the charts here, I'm just going to hide the oscillators down below just for now. Take a look at the price action itself. I know a lot of mess on there. How about we just hide it off for now and take a look at what we've got on the go. We're down here below these moving averages. They're all spread out in a nice bearish formation. We've got the yellow, green, blue, and pink moving averages. They are the 10, 18, 34, and 36 and 54 period moving averages. Those are the atomic numbers. They're good numbers. And what we're looking at, this as a serious comment, what we're looking at here is that we have come down the way here, and we've been resisted by these so far at every point of asking, with our highs coming in at the 15 or the 18, sorry, or perhaps coming in here at the 56 in recent times. In the past, we saw the 56 coming in here and operating as support. So what can we derive from this? Well, we can say a few key things. For instance, while we've come down here and put in a new low compared to our previous low over here, we're still slightly higher than our low on the 24th of September. Overall, we've not put in any higher highs. We have a clear resistance perhaps offered up by our previous low, where we also see our 10 period exponential moving average coming in at, and this little inflection area just here. This is a clear zone. Movements past this would be quite positive over the period of the next few days, as we would see then the chance for these to turn around. Looking towards the higher moving averages and the prices that they're at just now for some ideas about where we could find zones of resistance in the near future. Let's stick a few rays. No, let's not, because we already have enough stuff on here. Well, let's just acknowledge a couple of things. We have a 618 Fibonacci golden pocket in at this zone where the yellow is at the minute that we broke down below. Obviously, this movement has been negative. We have a clear area of support and resistance at 236, 93K Fibonacci area in here, this white line where the 56 is. That's currently coming in as another lower high. Oops. We have the convergence between this area here where we're at currently on the 3rd of November and the previous low on the 20th of October. Conversion as well versus the actual lower low over there on the 24th of September. So we are just more or less shaping up healthily in terms of the shape of this. And we formerly had a triangle on the go in this area as well that we spoke about enough. How do you draw these in again? What are the 3 points? This that we spoke about enough times that we have clearly kind of moved outside of. We are in the potential for fake out territory, I suppose. That kind of ended as really in a sense yesterday at that 50% moving average there when we took out the 236 over here on this orange number. This is a Fibonacci extension. So we've actually validated this 236 over here currently, and we can then look forward these targets towards the downside, which is matching with a measured move. We'll have to wait and see if we get any positivity. The best case scenario for that is currently looking at a turnaround in here at the 382, somewhere obviously between where we are now and 73. Movements down below there, negativo. Exponential. So let's move over to the dollar pricing, looking at this, and actually, by the way, you might have noticed I'm going to be a bit briefer in this episode today. I'm just going to say what's on the chart without explaining it too much. As you can see there, I just did that with the Bitcoin pricing. We could obviously look towards topside targets, but the topside target of 93k being significantly far enough away from 77, etc. I don't need to. That's the type of explanation that I'll not be doing for the rest of this video, including the Tezos section as well. So looking here at this thing, we have this channel where we've been moving towards the top side and we've come down towards the low side, and we've actually broken down at the minute below the line that we had drawn on there. Of course, the potential for subjective interpretation of where to put that line is obviously in place. This looks like Chinese characters. I'm going to have to just use this thing here to get rid of them, sorry. So what we see here, this has obviously already been explained. We've come in, hit our 1033 target. We've been talking about that, by the way, since all the way up there in the 12s. Again, we were talking about this. This is honestly, like, you subscribe to this channel, at least 50% of the people watching this video right now subscribe to this channel. You know that we were talking about this. The question then obviously boils down to currently opens and closes about this 1033 area. Subsequent to that, the 985 area in terms of opens and closes. Let's just call it 980 instead. And that one, that's the key for us currently. Oops, sorry, I meant to look at these, but I double clicked instead. Looking at this upward movement, we did it without the divergence. We've come down here so far. This constitutes a higher low. We're in volatility territory still. When these musical chairs stop, I expect some sort of action, potentially towards the top side, of course, potentially towards the lower side. Two targets towards the top side are currently 1219, 1369, target towards the low side, currently down there towards 733, various other ones along the way. This Fibonacci extension here that we have on the go down there, the 382 coming in at 826 will be key for us. Should we take out the 236 here and validate this extension in there at the $10 round number area? This is where we've seen the numbers come down to. I mean, this is $10.07. We've come down to $10.05 today in the price action. So we know that this is the formation that we're looking at. I'm tempted to go into explanation mode here, but I'm not going to bother. This is what we're looking at. This is all of this information is the key for us right now. Currently, the upside key, if there's going to be one, is sitting at 1175. The same information is visible here with a measured move that could potentially take us down towards that 850 number. We've already discussed these targets. If you want to know, though, of course, this 930 is a 618 golden pocket there for us. On the Ethereum story, what did we have here? This ascending triangle, has it been broken? Is it done for now or not? That's a question. You just noticed, by the way, if you're looking at my little screen, that I had a thing pop up. These things are distracting. They happen. If you're ever, that happens all the time, by the way. And in the videos where it's just, like we've got it, I have it set up like this somehow or whatever, and you can't see the screen, you'd never know that was happening. And I just kind of, go on through it anyway. All the time it happens, these notifications. I could change it in Windows to have none of them pop up when I'm recording, but anyway, distraction. We have this ascending triangle. Is it the way that it is or not? Let's kind of ask a question by zooming up towards a bigger time frame and being able to ask questions about the construction of this thing. If we had to then kind of remove this, move again that line, move it a second time, then maybe perhaps we could look here and we're still pushing outside of that zone. On the weekly chart, you can see that the sort of structure of this is slightly different. Down there on the 12-hour chart, you can see as well, this lines up perhaps more perfectly now, having re-investigated that on the 3-day, and we're in this area. Of course, fake out lasts right until we get past this wick over here. We spoke about this probably. I mean, if we didn't, then of course, as a Rocky Outcroptician, you'll have known fine well that this, of course, is that territory where we could go to. We need to see push past this zone here at the 2656 area for us to be able to say that, we're at least exploring the potential for a measured move off of this ascending triangle, which could then be playing out negatively. The moving averages coming in here, the 10 right on the edge of the triangle on the 12-hour chart. On the 4-hour chart, you've got the 18 up there as well. Looking at those things and asking to ourselves, can we supersede them or will we live below them? Currently, looking here at the 1-hour chart, we tried it recently but have failed so far, but we do have this little movement towards the top side. that, of course, could be considered to be positive. What do we have that's not so positive about it? Bringing this up, you can see this is higher, this RSI, than previously, and we know that this is in a downward trend. So if this high, which is lower in price action, is higher than this high here on the downward trend on the RSI, but not on the prices in a downward trend, looking at the tops in a downward trend, and we see a divergence there whilst we're trending bearishly. And if we were looking for normal bullish divergence, classic divergence in a downward trend, we'd look at the lows to see if they were getting lower. We're looking at the tops in a bearish trend, then you've got hidden bearish divergence. Of course, that is what's coming in here as we're putting in what looks to be like a flag on the charts. This being your pole down the way, and this being your flag area. That's how you could identify a bear flag far more efficiently. Not efficiently, is that the right word? But far more professionally than simply by saying shapy, wapy, shapy movement, shapy that you find on your average YouTube channel. Of course, now looking down at this construction of this and its relationship with the oscillators down below do give us an overall more bearish feeling, despite the fact that this could be moving towards the top side. Nevertheless, zooming on even a bit further and looking down the way, we can see that we are not bearishly divergent between these highs here in this upward movement across any of these oscillators. And while we have had a negative cross here on the DMI, the ADX is below 25. It's actually moving down there below 20 currently. This cross is happening in effective chop territory. Perhaps we see this cross again. That would be the failure of the bear flag. We can start to look towards targets like this 56 exponential moving average here and our previous high in terms of moving up the way on this one. This is done on the Litecoin, or the Chainlink, Ethereum pairing. I'm fully aware that nobody's trading this one, and therefore I've allowed myself to go down the time frames a little bit more. Good stuff, right? If you don't find that transformative in terms of your technical analysis, then, well, I don't know, tune back in a few months and maybe I'll have improved my technique, but I dare say you probably should have. Looking here at Tezos then, and by the way, if you just joined me for Tezos, I highly recommend you watch the link video there at the start of this. I mean, it's just like, for a lot of people, it'd probably be describable as being mind-blowing. You know, I'm not saying anything particularly profound in the video about anything, but just the way that we come about constructing our analysis of the chart here is quite unique on this channel. Obviously, it rhymes quite well with everybody else out there in the world, but we do this sort of, you know, a cut above. And yeah, cool. Anyway, sharp. So you got a notification there, came up on my screen. You maybe saw that in the wee box. Let's take a look at the charts. This is the 15-minute chart here, and I'm not going to spend any time on it. I just ended on the link one down there for the crack. What have we got on the go here? Well, we have this wedge. We've moved outside of it, but we've come back and we've retested it so far. Is this a failure? Is this a failure, or could we be moving towards the top side? Well, largely this is going to depend on the Bitcoin performance versus the USD, of course, but possibly. So we'll have to check out the USD pricing for Tezos as well. Currently 187. That strikes me as not being particularly good. I've not looked at these charts today though, so let's look at them together. Thanks for joining me, by the way. FOMO free, greed free. Link Ethereum also, by the way, down currently. You know, we've had this down, or Tezos Ethereum, we've had this downward price action across both Link and Tezos today. While we've seen downward price action here for Bitcoin and Ethereum, just checking in then with the Bitcoin dominance chart, excuse me, we can see that it's actually moved towards the top side in the face of negativity. That makes sense. 0.5% down for Bitcoin, 1% down for Ethereum, 3% down for Link, 1.5% down for Tezos. You know, so we can see the shape of the overall markets currently. Can we find enough buoyancy to move outside of them? Well, this of course is counter trend, and we're looking at a downward trend here. We do have a low which is coming lower than our previous low. Should we close out the day today any lower than 1400, you know, so if we go below this 1400 or 14,000 satoshis to be accurate about it, and close anywhere down here, then what we're looking at, of course, could potentially be bullish divergence here on the RSI. That would be interesting. Bullish divergence on the stochastics in this oversold zone, by the way. So, we could just see more of it. That's always to be reminded. And this cross here, we've got the ADX is crossed now above both of the DI lines. Let's see if this curves down the way, then we'll be in a position for looking at a change in momentum in terms of the chart. I'm not going to go into super detail for us. Suffice it to say, the 10 exponential moving average comes in here at 1486. The 18 is in at 1580. Let's call it 1485 and 1585. In the middle of those at 1550, we have the 236 Fibonacci. Of course, those are our clear targets for the time being. Further movements towards the downside. Well, do you want a target down the way? We've already taken out the 1618 of this particular Fibonacci retracement. We're at this inflection point just here. You'd have to look down towards the 1100s area thereafter if we were to crack on down further. Plenty more things to look at in the meantime before we get there. Starting off here with this weekly look at the USD pairing and seeing that while we have these lows over here and they are convergent with the RSI, and they are convergent with the potentially just a little touch of bullish divergence here in the stochastics. If we see a turnaround in price over the next couple of weeks, they'll probably end up with a touch of Class B. Class B depends on where we see the close. Closing higher, definitely. Closing lower, it's definitely question mark time. 186 underlines the key importance of that point for us. We think it's fair now to call 186 an inflection point in the market. We've got this negative cross that happened in chop land, though. Hopefully that gives us our most positive sort of counter trend indication in terms of the stance of this market, which is actually coming in and putting in lower lows across the time frames here. Coming in at the low end of our pitchfork though over the last few days. If I jump up towards the 24-hour time frame, you can see that even includes today's price action, having come down as low as 180 towards the lower end of that pitchfork. Clear areas towards the top side start coming in here with our 236 at 195, bringing up the RSI. You can see that bullish divergence. You can see that on the stochastics, and you can see it here on the DMI as well. Yep. While we've got a sort of overall not particularly strong trend towards the downside, I want to see these cross back over the moving average and the stochastic line. I use the exponential moving average. As you can see, the simple one is a wee bit further up there. It's a little bit slower to respond to the changes that we've seen in terms of price action. As you can see here, that we have the exponential one operating a little bit quicker in terms of its change over to red. I use that in my thing. If you want to access these indicators I use down below, just join the Discord and ask me. I'll hook you up, no problem. I will do enough edits to this DMI eventually, by the way, little news piece for Rocky Outcropticians, that I'm able to publish it properly on TradingView. It's just that I published it in the past and they removed it because they said it wasn't different enough to the original DMI. So I've got a few ideas and I'm going to work on them. Then it'll just be dead easy to add to your charts. You'll be able to go up to this thing and type in Rocky Outcrop and be able to choose it from this list. I can do it because it's part of my scripts. But it'll be public soon enough, I'm sure. Okay, anyway, 236 comes in at 195. Let's leave it at that in terms of key areas. No, I've already said 180 in terms of the other one. I could look at various different charts here. We've got lots of different activity on the go. This green line, check in with that. You can see what we're on it again. This blue serrated line. By the way, this particular blue serrated line was drawn in, when? Sometime back here, maybe towards the start of the year, was it? I'm not sure. A long time ago, I think. Let me know in the comments down below if you remember me drawing in that line a long time ago. We're below it now. Of course, in terms of HitBTC, we had this on the go for ages up at 257, and we talked about that. We had that drawn in for many, many, many months. That, of course, key area for us. But this chart here showing you quite clearly that 236 in there at 239 is going to be super important. If we can move up towards these zones, very, very good. You'll have noticed that there's no contango or backwardation style effect, no differential in the price action across these pairings over the last number of weeks. You'll have noticed that along the way. That's one for the old school outcropticians, I suppose. Looking at this, if we got a massive then positive response in terms of price action, this is of course Tezos to Ethereum, we could be looking up as high as the 0.01 area, bearing in mind that it was of course more than 100% up from where we are just now. Lovely. If we see certain things happen in the markets. Therefore, I'd recommend you go and watch the Bitcoin and Ethereum videos so that you've got an idea of how those could be going. And then, of course, make your own assertion with the USD pricing and the Bitcoin pricing. Maybe, of course, we see some of this going on. Now, if we don't, we're looking at this and saying that, you know, bad times could lay ahead. Okay, very much so. If we do, though, then cool. Let's see 0.068 being our first big marker. 0.005 is where we are just now. So we've got, like, you know, another chunk to go. In fact, you know, just put this into context, we need to see the prices go up by a factor of almost 40% just to get to the 236 currently. If we do that, we're moving past fake out territory of this wedge, then on for a potential measured move. Looking at this thing, that takes us up towards these zones, and that is going to do for today's episode. By the way, I'll just zoom myself back up here to the thing as I say cheerio. What we do on the channel is transformative technical analysis. If you watch through the Chainlink one and watch through this one, then you'll come away from your charts with this video to then return to your charts with so much more skill and alacrity that you will actually be able to enhance your self-reliance and your confidence in yourself as a trader. There's a very, very nuanced and subtle but quite calculated approach to how I make these videos, although of course it all appears like it's absolutely natural, and while it is natural, it's subtly manipulative too, in order to turn you into a better and better and better trader. There's a transformative thing happens here as I talk to you through this medium of YouTube and LBRY or wherever else you might be watching my videos, and think to you and I talk directly to you about how to look at charts in a consistent, FOMO-free, greed-free way. Of course, subscribers already know all that and get the benefit from it. That's just a little shout out to people who are joining us here, maybe for the first time today. And just so you know, that's what you're in store for if you subscribe. And of course, if you enjoyed the video, got some value from it, go ahead and caress the like button. I'll catch you in the next video.